Ladies and gentlemen, Kim here. Welcome to the market update. Hope you guys are enjoying your weekend. Today is Sunday. As I record this video, it looks like market continues to make a move here. S&P 500 ETF Spider is currently, or closed the day on Friday at 417.26. It's interesting how much people are hating this move. That it's funny because people are saying that this is scary over here. Well, they said it was scary over here, and then they said that this is gonna be a bear market rally, and then they said that this is a bubble, and then they said it's scary, right? And so it's always something, right? It doesn't matter where we're at. It doesn't matter if Spider's at 220 or 417 or 180s back in 2016 or 190s back in 2012. It doesn't matter where we're at. We're constantly bombarded with fear, constantly, letting others to whisper these voices in our head, listening to the CNBC or the quote-unquote experts or the different people you follow on these social media platforms, not letting the market itself to dictate where the market is going, the health of this market, right? I always say it's not what they say that matters, it's what this market is doing that's gonna matter, right? Because ultimately, that's how you're gonna get paid as a trader and investor, right? You don't get paid by speculating, or you don't even get paid by calling things. You get paid by correctly betting in this market on that direction, right? And obviously, man, market doesn't go straight up. It's gonna have its fluctuations, and that's what we call an uptrend, higher lows and higher highs, right? So in tonight's video, I'm going to be covering Spider. Let's do a couple equities today. Let's look at Apple and Tesla. We'll look at gold and grayscale Bitcoin today, as we normally do on these weekend analysis. It is all coming up right now. All right, let's actually go to the 65-minute chart first and follow up on some of the things we've been talking about this entire week of last week, looking at levels and things like that. And so quickly here, short-term moving average has been that key moving average that we've been following ever since we reclaimed that short term, cultivated that higher low here, right? Prior resistance. Look at that short term moving average, prior resistance acting as new support. In that process, we'll cultivate and establish higher highs. Here you can see short term downtrend here. Yes, lower lows and lower highs, right? Lower lows, lower highs. What happened here though? What happened right here? Look at that pivot. Look at this pivot right here, right? That's what? That's that prior support acting as resistance, and then that downtrend continued, that short-term moving average acting as resistance. But what happened right here? That's higher high, right? No longer we are in a short-term downtrend. We're now in a uptrend with that cultivation of that's no longer lower high, right? It was, you can see that lower high, but once we did this, and that was that, what happened? That is no longer lower high. We're going to consider this as an higher high because this high is higher than this high, right? And then in that process, what happened? We've also cultivated higher lows. And what also happened in that process, we reclaimed that short-term moving average. Short-term moving average switched teams back to bullish team, supporting the buyers. And then it went up here, kept going higher for the entire month of April. We finally saw a pullback for the first time in April, came down to exactly where that short-term moving average, right? So now This is where we opened up on Friday. We opened up with a gap up. And quickly we saw that sell-off. But once that gap gets filled, what happened? It acted as what? Instant support, right? We held above it, sideways, first, second, third, fourth, fifth, and pretty much grinded higher. So now, looking at this here, where my short-term moving average is hanging around, it is residing at 414.30. So should there be any kind of a down move, you want to look at 414.30 as a potential support, right? Because it does have pretty impressive resume as we've seen here, right? So we wanna give respect that it deserves, looking at his resume. If we do lose it, if we do see some volatility, just right underneath it, we have the gap support at 413 and the worst case scenario at 411. And so this gap is going to provide that strong cushion because that gap, the entire gap area is going to provide support. So in the short term of things, I believe as long as we stay above in this vicinity, I want to continue to give benefit of the doubt to the buyers. Let's check out that oscillator and see if we can extract any more information from the Friday price action here. So let's actually zoom in here a little bit, see what this oscillator is doing, because it looks like we're really not doing much. We're just pretty much, we paused. So oscillator is paused, and oscillator does have room here. If the oscillator really wants to push, it can still push. That will be for another day of move here at least, but looks like we might be stalling here. So we maybe, right, potentially have this kind of a grindy bearish divergence. But keep in mind, the bearish divergence that are grindy is less potent. What I mean by grind is grinding. It's been hitting this resistance multiple times, right? And then we got these lower highs on my oscillator. Technically, yes, it is a bearish divergence, but it's grindy. Here's a micro-term bearish divergence here. You see how grindy this was? You see that, and then this thing kind of slightly getting up here, but grindy. We barely saw pullback. It just gotten right back up. So that grindy divergence is less potent. The real divergence is really peak to peak, right? Peak to peak, like a nice sharp peaks and a nice sharp lower high on the oscillator. That would be a potent real bearish divergence that you want to look for. So with this, basically what it's showing is that what it's saying is actually not bearish. What it's saying is buyers are continuing to march higher, though they might be a little bit tighter, but there aren't many sellers up here, right? And that's why buyers are taking advantage of this situation and continuing to push up here. And that's kind of what this oscillator is telling us. So I have to continue to give benefit of the doubt to the buyers. But with any kind of little bit of sell-off, that if this thing start curling back down, we may see price coming back down here about 413 or so, retest that short term and the gap area. Let's go back to the daily chart right here. So we've been tracking this rising pivot, right? Long-term rising pivot for 7-8 months now here, really since last year of July. And ever since then, and we wanted to continue to give benefit of the doubt to the buyers as long as we stay above it. And I think good thing about this recent move is that initially we actually, it took time, right? And that's what I'm gonna give a lot of credit. Before this swift breakout that occurred, it's been grinding for how many months, right? Ever since November. So November, December, January, February, March. For 5 months, we've been grinding, up and down, up and down, up and down. I look at that as a consolidation. I categorize that as sideways resting pattern. And then after bad months, difficult months, up and down months, we finally seeing in month of April, big breakout, just pretty much going up every single day. See, what most people don't understand is this is how the market moves. Generally speaking, you look at stocks, right? You look at any stocks. You know, this is why when you're trying to time things, you'll never make money in this market. You look at stocks where that stock just doing nothing for months and months and months, maybe downside or something, and it just boom, takes that one move, and that thing gets back up to, new all-time highs like that. But it's been grinding and grinding, consolidating, up and down shenanigans, and then it just takes 1 month to change the whole outlook of that stock. How many times have you seen something like that, right? This is why many times when people are trying to time things, think about all these short-term traders and swing traders trying to time this market, shorting this market, trying to time this up and down. Nobody made any money over here, right? Back in November, January, February, March, it was volatile, up and down, move, gap up, gap down, right? People getting whipsawed, people getting stopped out left and right. And then finally, what happens? You're exhausted. You're exhausted. You do not want to deal with this market anymore. And finally, when most people give up on their trades, getting whipsawed, getting chopped to death, getting stopped out left and right, finally, what does the market do? Boom, makes a move. Why? Because the market always fools the majority. Because most people are always trying to time the market, predict the move. They want to YOLO that. They wanna throw their dice, right? And that's not how it works in the stock market, because if you treat this market like a casino, you have a less than 5% chance of winning. And that's what majority retail traders gonna do, treat this market like their little playground, like a casino, right? And as long as you continue to, engage with this market with that kind of attitude, this market is going to continue to punish you, because this market is designed to punish those people. So, at this point, let's zoom in here a little bit. You can see we had a swift movement. I think traditionally, seasonality-wise, April's been usually it's a good month out of the year. April usually tend to be that good month, and this year it looks like it's holding in that myth as true. And also, it's not really a myth, actually statistically correct. It's a statistical, factual statement that, April usually is a good month for the market. And why things like this happen? Because we're already in a good bull market. This kind of stuff will not happen in a bear market. Seasonality is going to go out the window in a bear market, right? But we're in a healthy bull market, right? Healthy bull market. I say that again, healthy bull market, right? Don't worry about what everybody's saying on TV, right? Just watch what the market is doing. Don't worry about the Twitter people that you follow, whatever data that is they are giving you. Listen to what the market is saying and respond to it. Right? There's no way, man, if anybody gonna chase it up here. Market has already, this is the thing about it is, people always want to start thinking about buying anything up here. Okay, we're uptrending. Is there anything I can, think about it though. Why do you want to buy anything up here when you should be buying down here? And you say, well, okay, who the hell is going to actually call the perfect bottom with the COVID decline, unemployment rate, Great Depressions? Who's going to buy? Okay, let's say you couldn't buy it down here. You still had a plenty of chance in April, May, and August, and September, and October. Market giving you all these opportunities, right? And now you finally say, oh yeah, market looks bullish. Yeah, it's too late. It is too late now. It is too late. If you weren't already in it, even last several months, there were these opportunities here also, right? When the market comes down, when the market sees a volatility, that's when you start to look for opportunity. You don't look for opportunity when the market is going up. There's still some opportunities there, but you really have to know where you're looking, where to look to find those opportunities. Most people ain't gonna see it. But when the market sees a volatility, instead of getting scared, that's when you strategize. You strategize here and here. And then when the market goes up, you know what you do? You start strategizing differently, right? Be fearful when others are greedy. Be greedy when others are fearful. I'm not saying this is the market top. I'm saying I'm going to start to look for some other levels. Maybe I can take some profits. while holding majority of my positions also. If you take that risk when there's a weakness in the market, you have a whole lot of options at this point. Should I be like, so what should I do? Should I close out my position? Should I close half? Should I maybe close 1/3? Or should I continue to hold? You have a whole lot of luxuries with options, but then if you're chasing up here, you're anxious every day, you're always worried about every single day, you're just restless because you chased it, right? So if I zoom in here, we got this gap that we just talked about on the 65-minute analysis. That's that gap here, and we have this level. If we're gonna see further decline, as of today, it's tough to say. We'll have to see how the market, and coming down, there will be about 3% decline, which is nothing. But if we do, that will be strong support because we got these pivots and the supports coinciding with the gap area. Not to mention my short-term moving average on my daily chart is also residing at 402. But we're at 418, 417 right now. It must kind of deal with that support first, or that gap support first, before we start thinking about anywhere in this vicinity. Can this market continue to go higher, K? Yes. Yes. Right? I want to show you something on a daily chart. This is a daily with the oscillator here. You can see, I want you to see some right here. So there are times where you can see we are hitting that overbought level on the daily, right? Are we hitting that overbought daily? And there are times where we did see a little pullback when we saw that there. But there's this time, this was back in August 10th. We saw that overbought right here, August 11, right? 10th right there. And then it kept going higher for another 20 calendar days. You see that? You see right here. See this? Hit it. We went higher for how many days? 20 calendar, right? Yeah. 20 calendar days. So we're hitting that now. Is that possibility we might go another 20 calendar days? That's 2 more weeks, 2-3 weeks of trading sessions. We could keep grinding higher. Is it a possibility? Yes. Yes. So let's continue to give benefit of the doubt to the buyers, and let's continue to approach this market strategically, not chasing at the highs, but looking for opportunities when it arises, right? Let's go to Apple here. So Apple's an interesting spot right now. So first of all, I want to let you know that we have earnings coming up on the 28th. So we got a week and a half before the earnings. But that was a pivot, right? This is a pivot. Resistance, support, right? We got a little double bottom here. And this is a neckline. And this is important neckline because you can see this definitely is that confluence zone there. That's definitely the level that market is going to react to. You can see all over this area. And we gapped up over it. I'm going to zoom in here. You see this? We gapped up over this. That's what I like to call jumping over the fence. A lot of times market don't want to deal with these confluence zone, these resistance levels. So what do? They just gap it over, right? That way it's much smoother. It's a smooth transition to the upside. Otherwise that resistance is going to have some implications, right? And then there was this down gap that needed to be filled, and it got filled. And then we've been stalling there. It is no coincidence that we're stalling right there, because that gap has been filled. When that gap gets filled, it's going to act as instant resistance. This is the reason why we've been hanging around for about 5 days or so. But there's a little gap here, right? So this is where it closed on Wednesday. This is where it opened on Thursday. So we see this gap. And I think this gap is going to determine the micro-term sentiment. So I think if we can hold this gap, there's good chance that we may continue higher to the upside. If this thing fills the gap, it's going to act as support, and we may see a bounce there. It'll be better if we keep this gap open, because look at this. There's a gap here, right? And then that's it. So, I mean, a tiny gap here. Let's just ignore that. So let's look at actually, there's this gap right here also. Right? That's a gap. This is where it closed. This is where it opened next day, right? So let's look at that as a breakaway gap. And keep in mind, when this thing gapped up here, made a move, came back down, retested the gap, that gap never got filled. You guys remember what I always say? It is better. You've heard me saying this for the last 12 months straight that I've been analyzing this market. It is better. It is better when the gap doesn't get filled. If it does get filled, it will act as support. But as far as the momentum is concerned, it will be better if that gap doesn't get filled. I mean, do you really think this is just random occurrence? This is all coincidentally happening? You're just getting lucky with these gaps? Seriously, I mean, I can go back to 65-minute chart here on the gaps. I told you guys this, when was that? Last week's analysis. Look at this. Do you really think it's just coincidental? Do you really think this is just some kind of a luck, random occurrence? There's this gap. We're looking at Spider now, 65-minute chart. This gap right here, right? Got up, came down, gap never got filled, got right back up. We opened up this gap, right? Got up, came down, gap never got filled. Boom. Okay. Come back to Apple. The same principle, right? Now we're looking at daily chart, but exact same principle here. There's this gap up. We got up, came down, gap never gets filled, and then we gap, and this is an island reversal right here. I put a little box in there, so that's kind of important. That's an island reversal. What's an island reversal, right? You get the gap down. You see that gap down? We gapped over it. So I can actually turn this into gray, right? I can turn this into a gray box, letting us know that that's an island reversal. Gap down, gap up, that becomes an island, and right there. So if you're a tracking gap, you would understand that somewhere here, that sentiment is shifting, right? And then that was it. So it all started because this gap was open and that gap never got filled, and we saw V-shape, well, not really a V-shape, but pretty much a vertical move ever since then, going up almost every single day. And then it slows down where? When this gap is filled. So I think it will be better in the micro term if we can keep this gap open for that pressure, for that, momentum to continue to the upside. And we got all-time high 143.50. Traditionally speaking, with the earnings coming up, which is 28th, a lot of times Apple investors get a little bit jittery week before the earnings or something like that. So we may see some grindy move, some up and down move, some consolidation or sideways or something like that. That could be a possibility also. But overall, I think Apple's looking bullish here, where we have gotten back. Look at all my moving averages. They're now starting to cross up here. There's a cluster of the moving averages. They're crossing back up here. That tells us there's a momentum shifting. There's a momentum shifting in Apple. So I look at this as a bullish thing. I'll look at that daily chart also. Look at this. Like, oh, look at the daily oscillator, okay, that looks overbought. Oh yeah, last time it was overbought here back in April, and it went straight up. You thought, oh, April, June, and you were overly analyzing this, not understanding how oscillators work, and you thought to yourself, okay, that's overbought here, so I'm gonna get out here. And then what happens? You miss out. This was when Apple was trading at 66, and it went all the way to 134, and you missed out this entire move. So you must understand how to properly use your oscillator, right? You don't ever use oscillator as a buy or sell signal. It's always should be a supplement to your overall price action analysis, and you want the oscillator to be you know, that extra information that you want to extract from the market. Actually, you know, I want to show you guys this, is that we actually got, this is a 65-minute chart on Apple now, right? I looked at daily, now we're looking at 65-minute. So we kind of have this bearish divergence thing. It's still grind. Remember we talked about this on the spider analysis just earlier. It's a bit grindy, but it's a little bit more like there are these peaks though, right? It's the spider was just like, spider looked like it was just boom, 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 like that. Right? Hitting it. And then, you know, but this one seemed to have these peaks more well defined. And then we got the lower highs on the 65-minute chart. So what are we going to make of this, right? So we have price action giving us this straight up move. We got this gap open. All the you know, moving averages are crossing to the upside. So there's a momentum is there, sentiment is there. But what are we? And we also looked at the daily chart, right? The daily with the oscillator, where okay, we're hitting that overbought. And then last time we hit this, we did see a short-term pullback for a couple of days or so, but we kept going higher. And then we looked at 65-minute. There's a bearish divergence here. So we looked at all of this, and what are we gonna make of it? So the 65-minute is telling us that there is some sentiment that is weighing this market, Apple, down. There is some possibility where we may fill this gap. There might be some kind of downward, maybe even possibly a little bit of shenanigans or some, like there might be. But at the same time, in the overall perspective, we want to give benefit of the doubt, because I've seen those signals get nullified, giving that there's a gap barrier here. So this is a level where you start to, you know what I mean? Let's say you were in calls. Actually, I was in calls here, right? And then, because based on analysis that I've given you, didn't I give you that analysis right here? That gap right there, the gap is remaining open. And then we're hitting, so I was actually in calls, I think here and here, somewhere here. Either I got in here or here, but it really doesn't matter, somewhere here. So what happened was, I closed up partial call positions here, right? But I only closed partial, not full. Why? Because I think overall I want to be bullish, but at the same time I want to manage risk, potentially seeing further downside move. And I'm thinking maybe if we do see further downside, I might be looking to or prepared to add more. But at the same time, understanding that on the 28th of February, we do have earnings, so you got to keep all that in mind, right? You see how it is much more complicated than just black and white. If anybody out there tells you the market is simple, they do not. See, people don't like complicated things, but the market is the most complicated machine, most complex, complicated, right? Machine in the entire world. You're not going to find anything more complicated than the market. There's no way you're going to master this market keeping things simple. But it doesn't sell. Nobody likes it. If I tell people that it's going to be extremely, extremely complex, this is going to be the most difficult thing you're ever going to try to do in your entire life, that doesn't sell. I have to say, I got a super secret right here. Anybody can do it. We all can become a millionaires. You just gotta follow my secret sauce, buy my course, buy my subscription services. Then we can all, it's super easy. Making money is super easy. You run. But you know what? It sells. But people get duped into lies because they want somebody to tickle their ears. They don't want anything hard. See, when it comes to workout, like you want to be fit, there's no shortcut. You gotta put in the work, hard dedication for decade to truly be fit, right? You wanna run a business? Hard work, hard. What makes you think You can come into the market, and then all of a sudden you follow a couple of people on Twitter, you watch a couple of videos on YouTube, you read a 1/3 of that one book that you bought, and all of a sudden you're gonna be a master in trading. Someone said, being successful in the stock market consistently is like winning in an Olympic. None of you guys even dare to compete for Olympics. Do you know what they do? These Olympians, they sacrifice their entire life since they're 4, 5, 6 years old, so they can run 10-second sprint race. And they have to be better, just 0.01% or 0.01 second better than another guy to win that gold medal. None of you is even dare to compete in Olympics. But everybody think you can come to the market. And you think you got the knack for it. You are born with a special gift. Well, tell me how that's gonna go in the next couple of years. We can all get lucky breaks, lucky trades here and there. The longer you stay, though, you're gonna realize this machine of this market. You do not know what you're doing, man. This market will chew you up into million pieces and just throw you out, spit you out like you're worse than a dirt. That's the truth. It's not going to sell, but this is the truth. Looking at the Tesla here, you can see it is no coincidence. Once that this gap was filled, we see a pause, down move there. This is why I actually kept this there so you can see it, right? But it is no coincidence we stopped right here because there's this gap here, right? And that's the neckline, right? And then looking at it in the short term of things, you can see some things are changing. You got the high there, we got the higher high and higher lows in place. And I think as long as we stay in that vicinity, and also you can see the moving averages clusters in that vicinity. So things are looking a bit better. So you can see how we see that downturn on Tesla. You can see that, and then we start to make a move here, and that momentum shifted here, especially with that gap up. So we came down, we see same thing happen on Tesla right there. This is not a coincidence. This is not a random occurrence. This is not some lucky thing that happened right here. That gap never got filled, right? And then we made a move here. That's a breakaway gap, continuation gap, another continuation. In that process, we got higher lows, higher highs here. We're on a short-term uptrend. We got these moving averages. As long as we hold this vicinity here, I think a 7. Let's give some wiggle room here. How about 68.6, this vicinity here, right? 714, 715, and 685. We stay above this vicinity. I want to continue to give benefit of the doubt to the buyers. It looks like it might want to get up here, get back to the all-time high level. We want to reassess the situation once we get back to all-time high level, because if I zoom out here, I mean, you know what I mean? We're up quite a bit, and that's what concerning me is the 60s went to 800, 900. So if this thing does get back up, would this be something? You know what I mean? So if you're a long-term investor, this is not an ideal level to start going long. I don't think so. You know what I mean? If you went long here, it's good to continue to hold. But I don't know if it's a good idea to go maybe 720 to hold for a long time. Maybe it could continue higher, but after this kind of move, right? That's kind of it's already made such a big move. I do not own Tesla in my portfolio. I really never have. I never understood it. I never, you know what I'm saying? It just never was in my radar. I know and one other thing was Tesla is such a popular stock. And if I was already in it, maybe a year ago or something like that, when it was like way, way lower, that's great. If you did that, that's just wonderful, and keep holding it because you have so much cushion, right? And that's the thing about it is, in all the stocks that I hold in my portfolio, it's kind of like this, where I bought these levels, I have so much cushion for up and downs. But going long after 1,000% move or some crazy number like that is not good for long-term investing. I think anything short-term might work out though, you know, but So in the short term of things, it's starting to look more bullish here with the higher highs and higher lows. It's got to stay above 685 to keep that momentum going to attack that all-time high once again. Let's go to gold. Gold is making some progress here, right? So you can see, I'm going to move this up a little bit. So you can see, look at this like a little neckline here. It needs more though, because in the midterm, we got these lower highs here and lower lows. So we're still in a downtrend in the short to midterm. We're still in an uptrend in a long term and a primary, but we are still short, we're still bearish downturn in the short to a midterm. So we got little double bottoms happen here, and then the neckline just clear above the neckline. That's good in the short micro term sense, but not enough because we got the lower highs still going on here. So benefit of the doubt actually goes to sellers in the midterm. In the micro term, we have some momentum here just in the last month or so. So what essentially that this thing needs to do, it needs to get up here. You see that resistance? We need to make this into an equal highs, no more lower highs, equal highs, and then pull back and then do something like that, or break above it and pull back, retest, do something like that before it can turn into actually primary term uptrend. Let's go to Grayscale Bitcoin. I'll end the video with this. So we've been talking about this gap sometime here. I said that this gap must be filled because this gap was open. This down gap was open back in February. Today we're at April. It's been 2 months. It's still open. The longer it opens, the worse it's gonna be. You can see they got up here, failed to fill that, came back down. But bulls are trying one more time. But you can see it initially filled it, but it's still some left there. Right, but a good thing is that you see those moving averages, they're still rising. So momentum is still there, still rising. As long as we continue in that and fill this gap as quickly as possible, there's a chance we can get up. We're starting to little bit staying too long here in this vicinity. We need to close that gap as quickly as possible. Keep the short-term and mid-term moving average to continue to rally to the upside. But if this thing starts doing this and those short-term and mid-term start to, curl down like that, I think at the time there's some warning signal, just because Grayscale Bitcoin made about 500% move since last October. So there might be some warning signal if we see the price getting below some of these moving averages. You guys enjoy the rest of this Sunday evening. Good luck trading tomorrow.